Alright, today we're going to talk about a trade in AMRS that we made this past Tuesday. This is a red to green move, so we're going to go over the entry and the exit points. The first is the setup. This stock has been selling off pretty bad for a long time now. It's really gotten bad here in the last month or so. It's starting to put in a short-term bottom, as we see right here. It is very oversold as it's down below the 20 mark, down like the 13s. We're also seeing a big jump, a big momentum play here. This is over 4% move. This comes off of huge volume. It's like the second biggest volume it's seen ever. So when we look at this, we wait for the bottom, we wait for the oversold, we see the volume come in, we see the big momentum push, and we're going to look for it to carry on into the next day. Now, in the mornings, what we want to see is some weakness. We want to see it come down and start below the close, so we want to see it go red, and then we're going to wait for it just to push into the green, and then we're going to buy it when it goes green. So our entry was, let's see, the last one was 16.53, so we actually got in at 16.56 because it was a wide bid-ask spread. Alright, so moving over to the next day, we see that it just took off. It went red to green, and then it just took off for the highs, and it actually closed like 3 cents off the highs. On a 5-minute chart, we can see exactly what happened. Here's the dip down in the morning, the weakness that we wanted. Got it. 16, like I said, we got a 16.56. That's right here about this candle. It spiked up and then it sold off, and it actually began flagging already. It had this big run, and then it began to flag. This is when we knew the trade was actually going to work. It had established a nice little base. Broke out of that flag, took off higher, and then as we can see, it flagged again right here. Before that, it took off higher. After that, it flagged again before it took off, and then it just ran right up. Now, we actually sold half of our shares at 17.27, right around here when it broke this flag, and then we sold the last half of our shares at 18.01 up here. Reason we didn't hold into the close is because the market was at the top of its range, and this is starting to approach moving averages as resistance, and we just didn't want to chance it. This trade was good for 9%. That was a big day for us. The way we played this during the day is we moved our stops up. As soon as we saw this flag come down, we moved our stop up to here. That way it's right under the base. That way if the flag fails, then we're out and we still make a little bit of money. Again, when it shot up and flagged, we moved our stop up to here. Again, keeping us in the trade, keeping us safe, but also keeping our risk minimal and locking in some profits. Again, it shot up and we moved our stop up to here. And again, it just took off and we just trailed our stop in just places that we could see right below the big candles. And then we just ended up selling out at 18.01. Like I said, this was good for a 9% move, and you could actually get a lot more if you wanted to play each of these flags. We weren't actually at the computer during the day, so I didn't get to play them. I give myself a B+ on this because the entry and the exit I thought were pretty close to being perfect. The only thing we didn't do is make extra money off these flag setups. But besides that, like I said, it was good for 9% on the day.